What makes stocks go up anyway? You may be wondering that. In this video, I'm going to share with you a lot of different reasons why stocks go up, because we know that stocks fluctuate both up and down in price while you own them. Hi, I'm Camille Gaines here, and on my website retirecertain.com I share information for proactive investors who want to do something besides long-term buy and hold investing, and maybe even create alternative income streams in retirement, because the more income streams we have, the less money we need to have for retirement withdrawals. In this video, I want to talk about why stocks go up in price. And I want to start with a little story. When I was in my mid-20s, I went skiing with my girlfriend Brickle, and she recommended a pharmaceutical company that I promptly bought with my hard-earned, not very much money, as soon as I got back to Houston where I was working. The stock quickly declined after I bought it. It was on some sort of run when Brickle had recommended it to me. I told my dad about what happened with the stock and how disappointed I was in the stock market. And my dad said, "That's the best thing that could have ever happened to you, Camille, because you need to lose money to understand how important it is to do research before you buy stocks, but also to understand what makes stocks go up and down." I've always remembered that lesson. So this video is really about what makes stocks go up, because what I've seen happen, what I've done myself even, it's been a few decades since I've done it, but a lot of investors buy stocks, or they analyze a financial advisor or an investment product and they say, this is a really, really great investment product. It has gone up overall for the last 5 years or the last 10 years. It's had an increase of, 300%, 400%. But what really happened is that the market as a whole went up. And whether this is an individual investor or someone analyzing an investment product, it's really important to understand that there are a lot of different reasons that stocks go up besides being the next Peter Lynch or Warren Buffett to wisely choose securities. So without further ado, I want to go into some of those reasons. The first reason a company's stock goes up is because the earnings of the company issuing the stock increased. This is the good old-fashioned reason that investors buy stocks. We buy stocks because we want to participate in the earnings of the company. We think they're going to make money. We've lost touch with that, I think, as stock market investors. Stocks are bought, or the market as a whole is bought, because we think it's going to go up, versus saying, hey, this company looks like a sound investment because it invests in this, and I see they're making money, and that conclusion is reached after much analysis, and I want to be a part of those earnings. So that's the very first reason that a stock goes up, because the company is in fact making money. The next reason that a company's stock goes up is because the company increased its dividend payout, so shareholders can earn more income while they own the stock. It's always nice, if your goal is dividend investing, to increase dividends when the company increases dividends, I should say, so that you can get a higher income while you're owning that stock. And that generally does drive up the price of the stock. The next reason is that the company buys back shares of its own stock. This happens for various reasons. A lot of the time companies have extra capital and they feel that their stock is trading at low multiples. They may even borrow at very low interest rates and buy back their company stocks. But whatever the reason, a lot of companies buy back their stock, and this drives up the price of their own stock, as well as being a catalyst to drive up the overall market. The next reason that a stock goes up is because the company has a stock split. And even though that doesn't really change the ownership of the company, as far as it's still making this much money and it's divided among these various stockholders, what it does is it gives people a perception that it's a good thing, but also it makes it more accessible to investors with less money to invest. In this day and age, with a lot of shares trading at $10,000 or at $1,000 or more, if a company has a stock split and their stock becomes, $250 a share, then more investors can buy shares of that stock, and they can feel like they're getting a decent number of shares. So a company stock split can certainly drive up, and does often drive up, the price of a stock. The next reason that stocks rise is because the overall market experiences an increase in buyers for various reasons. This might happen because of Tina, there is no option for anything else, or there is no other investment that looks good. This has driven up the stock market with low bond interest rates, for example. It may be that investors come into a lot of money, or there's a lot of liquidity and the money needs to go into something. Another example is the government issued checks for stimulus during the shutdown. A lot of that money poured into the stock market. So the stock market as a whole can experience an increase, and that drives up the price of your individual stocks. Another reason that stocks go up is because the stock gets added to an index fund. There may be a company that's not quite big enough or doesn't quite fit the criteria of a particular index. And if that fund or that stock gets added to an index fund, that can just significantly drive up the price of the stock. The next reason that stocks go up is because it gets media or public attention. We've seen this happen on social media in the last few years. There can be favorable news that comes out on the media about the company, and it gets a lot of attention. It brings the stocks to the forefront of investors' awareness, and that drives up the stock price. Another reason that stocks go up is because large institutions buy the stocks. Institutional movements in and out of assets, whether it's individual stocks or markets as a whole, that's a huge driver and influence of the price of assets. So if an institution buys a company that you're invested in, it can have a huge influence on the price of the stock. And sometimes what happens is one company will start buying into it, and then other companies learn that this one institution or fund is buying into a stock, and it's like a cumulative effect. They all just start piling into the stock, and the stock rises in price. And this happens with the market as a whole, as well as individual stocks. And then the next reason that stocks rise in value or price, not necessarily value, price, is because the stock sector becomes favorable. Similar to the Tina that I was referring to earlier, where there was just nowhere else to invest, it may be that a specific sector of the market is popular and investors flock to that market or buy funds in that sector, and because various stocks make up the funds in that sector, they all experience an increase in price because the sector itself has just had a huge rotation into it or become very popular. These are the main reasons that stocks go up in price. Whether or not picking individual stocks is suitable for you, the main thing to remember is, above all, to retire certain with enough money to fund your desired lifestyle for life.